Okay, welcome to this week's market wrap from Magnetic Trading. We were actually off last week. We were on holiday. We usually take a couple of weeks holiday a year, usually in August, and the other one we take is Christmas time, of course. It's always good to take a couple of weeks off from the market, reboot, come back to them with a fresh mind, and often that can do wonders for your own trading. So this week, what are we covering? So as usual, we're going to cover a review of our advisor trades, so the trades that we took on our own portfolio last week and for our clients. We're going to go over the first of the month pension trade. So we actually took advantage of this on Tuesday, because Monday was a bank holiday, the FTSE was closed, but we took advantage of this on the Tuesday, and we actually did an official trade. So remember, the first of the month, often pension money will come into the market at a certain point in the morning, and we're looking to take advantage of that. We're also going to go over the September effect. So historically, September has a tendency to be a weak month. So often the stock market can go down for September. So we're going to go over why that happens and why we really shouldn't be positioning too many buy trades for September. And finally, we're going to give you some analysis to take away for the FTSE this week. All right, so last week we had one break-even trade. We actually bought the FTSE on the Tuesday, and that was connected to the pension money coming into the market. And we'll show you how we traded that. We actually came out break-even. We missed our profit target by about 10 points, which is a little bit of a shame. And then we had another trade. It was a sell trade, because actually the stock market at the moment is negative at the moment, so we were focusing on some sell trades, but unfortunately that trade was stopped out. We did go in 1%, and when we realized it wasn't going right, we reduced our risk at entry, so it was only 0.5% risk on that. So remember, in our trading, we want to be making more than we do when we lose. Now, at the moment, we're running on about a 75% win rate. So if you're making more than you lose and you're winning 75% of the time, then you're making, well, you've got a nice recipe to make money. Okay, so this is a chart of the trade that we took on Tuesday. So the market's opened for a new calendar month, September. And on this day, we always look for a reason to buy. So there's a particular time when we want to be buying, when we view that the pension money is going to come into the market. Now, of course, we do need a reason to buy. So you'll see on the chart that the market opened in the top arrow. So the top arrow is where the market opened. The market actually pushed down, so we didn't participate as the market was moving down, but when we got our buy signal, we entered long. So long means we bought the market. So we bought the FTSE at 59.33. We had our stop loss below 58.96, and we were targeting really up to 59.80 at this point in time. So as the market moved up, what we did is we took half profits. So we took half profits at 59.55. The reason for this is the market had already pushed up about 40 points in quite a quick time. So it's always prudent to make your trades risk-free if you can by taking the half profits. Now, a lot of clients ask me, what does taking half profits mean, Mark? Well, just say you bought the market at £10 a point or $10 a point. As the market moves up, if you want to close or take half profits, you simply sell $5 or £5. That closes half your position or half your contracts in the market, leaving you with half in the market. And the profit you've made from that half position, you can then use to pay for a stop. So that's exactly what we did. We actually raised our stop up to 59.16.15 area, so that if the market moved down again, we couldn't lose anything. Now, the benefit with doing this type of strategy in your trading is that it reduces your emotions and it allows you to let the trade run. Now, of course, in this particular instance, it came back down. It got us stopped out for nil gain, nil profit. Nil profit and nil loss. so it's totally break even. But had it just shot up, because we have no emotions linked to the trade, because remember, money is emotional, we can just let it run and hopefully get to a higher profit target. Because look, money is emotion, and there's no getting around that one. So we do like to make our trades risk-free quite a bit. Okay, so that was the Tuesday trade that we took, and again linked to that pension money that comes in on the first trading day of the month. So make a note of that on those particular days you want to be really focusing on buy trades, and that actually can apply across many of the index markets, not just the FTSE. Okay, September effect. So what's the September effect? So after the money came in on the first trading day of the month, we were actually then turning a little bit negative in the market. The technicals were negative, but B, September is historically a negative weak month. So research shows over the last 100 years that this is weaker than many of the other calendar months. So why would that be? Well, investors looking to lock in profits after the summer period to offset schooling fees. That's one thing. Smart investors looking to lock in profits and for tax reasons well ahead of the year. Remember that the smart investors often do things well in advance of the retail market. So remember, the smart investors or traders often get into a trade way earlier than the retail market does. Often the retail market has missed the move or missed a decision, and they get in at the wrong time. I'm sure you'll be aware of Bitcoin. Bitcoin went up to the 20,000 levels, and everyone was totally bullish on that particular instrument, but it was of course the wrong time to be getting in when you're getting everyone in the internet saying it's time to buy. So remember, you do want to be doing often things that are opposite to the mainstream. And also another reason for September being a weak month, and this particularly for the FTSE, is that the big dividends have been declared already. So within the FTSE 100, there of course are many companies, and a lot of those companies report big dividends in the first 2 quarters of the calendar month. And as the third quarter comes to an end, the dividends will tail off. So that the fourth quarter particularly is very low on dividends. So that will have a less bullish effect on the FTSE in particular. Okay, so that's the September effect. What else have we got to look forward to for September? Well, we've actually got triple witching, but we'll leave that to maybe next week to cover that one. But we also have the end of the quarter. So we're having the end of the third quarter at the end of September. I believe it's a Wednesday, which is the 30th of September. Now on this particular day, what we do here at Magnetic Trading is we get our clients into a sell trade. Because if there is any profit to be taken, often you'll find that the stock markets will sell off again at a particular time, because a lot of the fund managers are looking to get out of bad performing stocks. We call that window dressing, trying to make their performance a little bit better, and then they'll look to get in new stocks at the beginning of October for the fourth quarter. So again, there's a particular time that we'll be looking to sell the ASX, the Dow Jones, the FTSE, and the DAX. And this is a massive multiplier effect, which means that because you can make money on 4 markets, actually 5 markets, you can make a lot of money on this particular day. Now, even if you haven't tried Advisor, this is a great month to try Advisor, because to be honest, you could easily pay for a year of subscription on just these particular trades at the end of this quarter. So definitely want to be joining or taking advantage of the Advisor service for this particular month. And also we have the quarterly triple witching trades, which are linked to expiry, which I'll cover in next week's video. Okay, so FTSE analysis for the week: 5,900 bearish below, 55.50 bullish above long term. So short term charts, we need to be a little bit wary buying this market, but if we get anywhere near 550, I'll be looking for a longer term buy, particularly on the FTSE, because I'm expecting that to rise. It's actually quite undervalued compared to other index markets at the moment. You'll notice the Dow Jones, S&P, Nasdaq, pretty much up to their levels and above what they were doing before coronavirus came, but FTSE is still pretty undervalued. So there's still quite a bit of value available on the FTSE running up into the last quarter. So any big pullbacks in the market, we're going to be positioning our clients long, looking for a nice rally into the end of the year. Okay guys, have a great week trading, and catch up with us next week for some more tips and analysis on the markets.